city is still focused on recovery, so we don't expect any major launches until the end of the year. There is still inventories to be sold, so there will still be transactions happening from here now to Christmas. Probably we're expecting major launch to resume next year, early next year. Yeah.
Do you think the response or the reaction in the primary market and the secondary market, will there be any difference?
We believe in the long run, buyers may be more focused on the first-hand market because for the second-hand market, they will have a lot of things to look at from now, particularly the building age or the condition of the property, where the buyers will have more considerations taken into account. Where the first-hand residential market, the buyers will have less concerns about that. Yeah.
Do you think that it would make residents think twice or reconsider to live in Tai Po?
In the long run, we think that Tai Po is still a very prominent urban district, residential area that houses a lot of people. In the long run, we don't think the impact would be huge.
Okay. And of course, as there is going to be rebuilding involved, what do you think the impact is going to be on construction costs as well as the impact on developers?
Well, there will certainly be more rules and regulations regarding constructions or renovations. With more rules and regulations, the construction cost is likely to be impacted as well. But these are all for the safety of everyone, which is good for the city as a whole. Yeah.
Taking a step back, we are waiting next week for the Federal Reserve to make an interest rate decision, and Hong Kong moves in lockstep with the Fed. There is expectations for 25 basis points, potentially more next year. What is your expectations for rates?
Well, we are expecting interest rate to go down as well. And I think a lot of the buyers in 2025 who are buying residential flats in Hong Kong are also pricing that factor in as well. So that's why, particularly in the second half of 2025, we're seeing a lot more investors, particularly investors from China, in Hong Kong, snapping up residential units. We see a lot of cases that there is like one buyer buying multiple units in a single development. There are also developers targeting this kind of buyers with payment plan or incentive to encourage this kind of bulk buying. So we expect with the interest rate going down, there will be more of this kind of buyer coming into the market because rents in Hong Kong are still going up on the uptrend. So the yield spread between rental yield and cost of capital is getting wider and it's getting more attractive for investors to go back into the market. So that's why there are so many investors buying multiple units, multiple residential units in the second half of 2025. And we expect this trend will continue in 2026.